very much, President Lagarde. Now, Eva Kaili from SND.
Yes. Thank you, President Lagarde, for your efforts during these challenging and uncertain times. During this pandemic, beyond everything else, we also understood that digitalization and the use of new technologies is necessary. And we saw the digital finance package a few days ago by the European Commission, while we witnessed the involvement of large technology and consumer companies in several stablecoin initiatives. The most known is Libra, and we also have European member states, actually, like Sweden, exploring coins like e-corona in order to provide efficient means of payments for mainstream use cases like international remittances. We have cash transfer programs, international consumer-to-business payments, cross-border payments, reduction of cost and time of transaction, the insane fees we see in these transactions, but also improving the accessibility for citizens, and use, of course, these crypto assets as alternative means of payment or even as a store of value. So basically, they are leveraging in inefficiencies and fragmentation we all witness in the European retail payments market. So we all agree that we need modernization, but I would like to know if, since you are the last few years exploring the risks, the benefits, and the operational challenges of these new technologies, if you could give us an idea of when and how ECB would take some steps to have a swift transition from open banking to open finance, and also if actually ECB is ready now to take bold steps to achieve that. Thank you.
Thank you so much. That's a huge, big topic, and one that is clearly of concern to all European authorities, and it is certainly and has been a concern for us as well. I'd like to just draw, a little distinction between some of the references that you've made, and I think it's important to appreciate that you have, on the one hand, the crypto assets, which are often simplified by reference to the bitcoins, but there are a few others as well that are, Ether is clearly another one. But those crypto assets, in our view, do not, at the moment, number one, given their size, given the very speculative aspect of this product, do not raise particular risk or concern when it comes to actually disrupting the payment system, disrupting the currency system that we have in place. So it's one category of assets, but I wouldn't regard them as currency or satisfying the criteria of currency. The second category, which is a different one that you've referred to as well, falls in the category of the stable coins, one of which being Libra, explored by Facebook, which has this very large network around the world. And those stable coins raise more imminent concerns in our view, especially when they have the potential to very quickly achieve scale, given the size of the network on which they could actually deploy their function. So we are particularly attentive to the stable coins. And I think that it's a matter that you will be able to actually discuss and understand even better when one of our executive board member comes to report to you and discuss with you this matter around the 12th of October, as I remember. But let me just point out that exploring a digital euro is a matter that is clearly keeping us quite busy, which is not going to happen overnight, because it's a matter that needs to be explored in depth in terms of benefits, in terms of cost, in terms of opportunities, in terms of risks that it responds to, in terms of consumer aspiration that it responds to, and also in terms of monetary policy and its proper transmission through the usual channels that we have used so far. And whether it's wholesale or retail, we believe that this digital euro is perfectly compatible with the continued transmission of monetary policy through our traditional banking system intermediation. Final point. I think that we cannot just look at the digital euro in isolation. It has to be part of an overall payment system where you clearly have a back end, which is, in our view, functioning quite properly, and that is clearly our target system. It also needs a front end, which clearly is under review by a number of European banks under the EPI system that was launched a few weeks ago. And it includes, as another component, the digital euro that is currently under exploring. I wouldn't say under review because it's going to take time and it's not going to happen overnight. Final point, I think that we have to be very attentive to the fact that to the extent that private operators would conduct the same business, they have to be regulated by the same rules, and that requires also the same oversight. So in our view, clearly those stable coins, if they were to see the light of day, would fall under the same regulations, the same oversight, and would certainly have to comply with all the rules and would not be allowed to operate until that is the case. I think that was also the view expressed by the ministers of finance at the last Eurogroup meeting in Luxembourg. Thank you.
Thank you very much. Now, Caroline Nachtigal from Renew.
Yes, thank you for being here, Madame Lagarde. And let me start by saying that unlike my Dutch colleague, Mr. Epping, I'm also very glad that the Netherlands is part of the Eurozone, although we still have a lot of work to do. But I have a question, or, well, let's call it a concern that I would like to raise. In March this year, you stated it's not the role of the ECB to close spreads between the member states. And I know this statement was, well, preserved, highly controversial. But to be honest, I could not agree more with you, Madame Lagarde, because my fear is that we keep postponing important structural reforms because member states know that the ECB will be there as a lender of the last resort. And my question is, what is your view on the effects of the bonds buying scheme and the low interest in relation to the structural reforms in the member states? So thank you.
Thank you very much. And, as I said earlier on, the monetary policy decisions that we made on March the 18th, if I recall, were clearly intended to stabilize the system and make sure that the fragmentation that was totally unjustified could be reduced. And to that extent, clearly the use of PEP has been extremely useful. Now, to your point about efficiency of those measures and scope, in our view, monetary policy has to work hand in hand with fiscal measures and also with structural reforms. Exceptional circumstances have called for exceptional measures. What has been decided by the Council and what will be debated and is under review by your committees, so as part of the New Generation EU Recovery and Resilience Initiative, that is going to be efficient and that is going to take Europe further and better if and when the structural reforms that will serve as the backbone to this transformation are actually taken. It's also, an economic truism to say that you don't want to waste a good crisis. And it is a fact that structural reforms are often better driven and implemented in times of crisis. So our hope is that we can continue to support the system and we can continue to deliver on our mandate of price stability and of making sure that the financial tensions that we observed can be reduced, and as they have, but that also structural reforms will be decided at national levels in good understanding between the member states in order to leverage to the maximum possible extent the recovery and resilience facility that is being debated. Thank you.
Thank you very much. Now, Georgios Kirtsos from EPP.
Thank you, Madam Chair. I have three questions for President Lagarde. First question, what about the appreciation of the euro relative to the dollar during this year? Does it worry you in terms of European competitiveness, exports, and the recovery of the Eurozone? What do you think should be done? Second question, the level of public debt in most Eurozone countries is skyrocketing. When do you think that a global assessment of the debt level should be undertaken, and what kind of policies should we follow to control it? A repetition of the policies applied during the previous crisis, or a more flexible and expansionary strategy? Finally, the third question, any news concerning Mr. Stournara's proposal in favor of the creation of a bad bank that could accelerate the reduction of LPS in Greece? Thank you very much.
Well, thank you very much for your three questions. I would first of all observe that the pandemic has sparked strong movements in global financial markets, including on foreign exchange markets, with the euro, if you remember, depreciating and weakening in the early phase, and then appreciating and strengthening more recently, and then in the last couple of weeks, yet again depreciating relative to the high level where it was about 4 weeks ago. Exchange rate is not something that the European Central Bank has as a target. We don't target exchange rate. This is not a policy of the ECB. And I'm not going to comment on the level of the euro or on the level of any other currency as a result. But it is clear that the external value of the euro is an important determinant of price setting in the euro area. And as a result, because it is an important determinant of price setting and has an impact on inflation, as we have observed, of course, we monitor those movements. We monitor the appreciation of the depreciation very closely in order to adjust our measures as a result of the inflation projections that we have in the short and in the medium term. Your second question dealt with public debt and the skyrocketing of public debt. First of all, we observe a significant increase of public debt in all European countries and throughout the euro area, from north to south. The level of public debt has significantly increased. Two things that I would mention. One is, in addition to the debt to GDP ratio that we constantly refer to, and which, by the way, is significantly impacted by the denominator, not just the numerator. For the moment, we have just an increase of the numerator and no particular movement on the denominator that would upset it. First comment is, what matters is the service of the debt. And Greece is a case in point where, given the very favorable lending rates that was granted by the ESM under the reorganizing of the program with Greece, where clearly the debt service has actually been extremely important to determine the sustainability of Greek debt. So, first of all, more than the debt to GDP ratio, which is biased at the moment, I think the debt service is the one that needs to be paid very close attention to. And at the current low interest rates level that we have, that service is generally quite low. Second, the maturity of debts is also critically important. And we are seeing gradually an extension of the maturities of the bonds that are issued by many of the member states in the euro area. Your third question had to do with my colleague and friend, Governor Stournaras. I think you are probably better placed to actually ask him exactly where he stands in relation to this national asset management company, or bad bank, as is often referred to. I don't know exactly where his project stands. All I know is that there was a very good roundtable organized late last week on Friday, I think, on this issue of the national bad banks and how they could be organized at the European level, how they could be coordinated, what kind of European regional level could be put in place. And I think that those considerations are important going forward. And I'm very pleased that the Commission has also taken on board this particular matter that we very much welcome. Thank you.
Thank you very much. Now, Hélène Laporte from ID.
Oui, merci.
Thank you very much, Chairman. Thank you very much, Madame Lagarde, for this exchange. Contrary to the classic purchasing of sovereign debt in quantitative easing, the rules are less stringent now, which has meant that the ECB could buy securities and shares or bonds issued by Greece. Another exceptional measure is regulatory loosening up until summer next year for Eurozone banks so as to generate a leverage effect. These hitherto unseen measures, together with the TLTRO3, has been very successful. But it seems now that the markets are going to get dependent on this accommodative approach, which is a risk for lenders, and it's overvaluing the power of the markets. So I have a question to the ECB's reaction to the pandemic, and then a more general question on the strategic review, because we don't have much information on that. My first question: the level of flexibility for this programme is very useful to secure the market. So there'll be a temptation to pursue the PEP beyond June 2021. However, have you integrated the risk of a second wave of COVID-19 and a possible extension beyond June next year? Now, the question on flexibility, you've already replied to that, but isn't the ECB concerned about fragmentation of the Eurozone because economic recovery will be very uneven? And then, following François Galhaud, who has said that he'd like inflation to evolve in connection with the strategic review, he wishes to say that the 2% inflation rate is not an approach per se, but could there be a paradigm shift? The Fed has done that. So would you be prepared to change your target whilst not tightening monetary policy or not revising the HICP to better reflect consumer sentiment? Thank you.
Thank you very much, Madame Laporte, and not Madame Laporte, I'm sorry. I'm getting you mixed up with... No, it is right, Madame Laporte. So on your first point, yes, flexibility has been the cornerstone of PEP ever since inception, and its recalibration and its extension has demonstrated that flexibility. Clearly, we have to be mindful of the circumstances. We have to anticipate the exceptional downside risk if they were to materialize. And I can assure you that in the projections that we have released in September, we did take into account resumption of contagion via COVID-19, not a measure of complete lockdown, but certainly containment measures that were taken in the course of the resurgence of the infection. So it's part of our projections. Some containment measures were included as well, and I think that it's against that background and against those projections that we will be receiving more empirical data, more tangible news that will help us calibrate and possibly recalibrate, if needed, the instruments that we are using, whether it's PEP or whether it is other tools in the toolbox. Second, as I have said earlier on, the use of PEP has been particularly effective when it comes to reducing the fragmentation risk and when it comes to making sure that monetary policy was transmitted throughout the entire euro area. So it has been useful, and if it is needed to use it again, then we will use it again with the degree of flexibility that will be appropriate and necessary in order to respond to the situation. The inflation evolution and the change of paradigm. I've said it, but I will say it again. We have had 2 seminars, one which was a stock-taking exercise, sort of preliminary before we entered into the actual substantive issues. The first big substantive issues that we tackled last week was inflation measurements, and trends of inflation. And clearly, as part of the inflation measurements, we looked at the HIPC, how it had evolved over time, how it had improved over time, what items were not included. For example, the owners' occupied housing costs are not included in the inflation as it is measured in France, whereas it is included in inflation as measured by the Fed, for instance, or as measured by used by the Bank of Japan. We also identified what is not measured, whether it's health, education, defense, and so on and so forth. And I think at the end of the day, it will be a matter of having a tool and an instrument that will best respond to the needs for transparency, for clarity, for reliability, for regular improvement. And that will be a decision that will be made at the end of the process, not in anticipation of the discussion that we will have, notably on price stability and the mandate that we have. So we debated that. We debated the trends that we have seen around the world concerning inflation, which has to do with clearly a varying relationship between the level of employment and price level, which had to do with what I referred to as the lowering of natural interest rates earlier on for all sorts of reasons. So those debates are part of our strategy review, and I'm sharing that with you because you just expressed the fact that you don't know much about it. Clearly, in the public account that will be released, we will mention some of the discussions that we are having. The difficulty about sharing too much too early is that it's a bit like a jigsaw puzzle. You cannot release one piece of the jigsaw puzzle. You have to sort of bring them all together and then roll it out so that it makes sense and it's understandable and clearly communicated. And we will do that in as palatable language as we can. So that's where we stand in terms of inflation consideration and thinking, and obviously some members will feel that they want to share their views, they want to communicate their view, and I applaud the reaching out events that will be organized by many national central banks, including actually the Banque de France, which has undertaken a great exercise throughout the country. Thank you.
Thank you very much. Now, Pedro Marquez from SND.
Thank you, Chair. Thank you, Madame Lagarde. We are indeed experiencing a monstrous recession like nothing we have seen or experienced. The response from fiscal policy and monetary policy finally came hand in hand, as it was needed for so many years. Still, the recovery remains at least uncertain, as you have already referred. Even in the current interest rates environment, it is obvious that the room of maneuver to inflate even further the Member States' fiscal policy action will be eventually limited in time, at least on the current economic policy framework. And it will only be partially and slowly compensated by the recovery plan. On this basis, how do you see the evolution of monetary policy in the short term? I want to salute the ECB statement of open-mindedness on the strategy review. But if the ECB has been persistently unable to deliver on the inflation target, are you open-minded on non-traditional monetary policy instruments? that could be more effective in terms of transmission of the monetary policy than the current that you have been using? Also, keeping an open mind, what is the role that you see for the ECB to assume in terms of its position on the common debt to be issued by European institutions? Thank you.
Well, thank you very much, Mr. Marquez, for your questions. On the latter point that you just mentioned, I would like to advise you that we are trying to help as much as we can the Commission in relation to the SURE program, the one that is intended to support member states in order to guarantee those part-time unemployment schemes, the furlough schemes as they exist. And we have made some really good progress to be able to respond to this SURE program and make sure that we can actually provide the technical backbone on which SURE can be deployed. For the Recovery and Resilience Facility, it's a much broader enterprise, and one where clearly we don't really know exactly what the timetable will be, what the periodicity of issuance will be, what markets exactly, how green those bonds will be, which we understand a good category will be. So it's more difficult for us to see how and whether we can help on that particular front. On your previous questions, I would like to say that, and repeat probably, that if there has been a good degree of efficiency, which has been actually noticed around the world, and that financial markets have also noticed, it's because monetary policy and fiscal policies at national and European levels have worked together, hand in hand, in order to address the exceptional circumstances that we have seen. My second point is that, as I said, we are not out of the woods yet. And recovery has to roll, not to stall. If the fiscal support that has been put in place was to be withdrawn, was to slow down, was to be restricted, or if there was great discussion about that at the moment, I think it would be counterproductive. And if I can, give a message at this point in time, in addition to the fact that monetary policy will be attentive and will continue to be accommodative in response to the exceptional circumstances, is that fiscal support is absolutely needed and needs to continue to work hand in hand with our policies. Thank you.
Thank you very much. Now, Ernest Urtasun from the Greens.
Okay, thank you, Chair, and thank you, President Lagarde, for being with us. I have two concrete questions. Firstly, on the monetary policy review, I would like to ask you if you can update us on the timeline for that review. I think that we've been discussing a lot this afternoon about that. It would be good to know which timeline are you working with. And then again to insist, Pedro, I cannot concentrate on my question if you don't continue. No problem. Secondly, I would like to sorry for the interruption. I would like to ask you for the also for a couple of things that have already been mentioned, but in relation to the decisions of the Fed, in that revision, would you be willing to consider a flexible inflation target, or also another thing that I think we haven't been mentioning yet, the possibility of having a symmetric approach targeting price level or the nominal GDP level as well? Will that be considered? And also the issue of helicopter money. Are there any discussions in the ECB analysing the technical feasibility of such proposals, because other central banks in other areas have been working on that? And my second question relates exactly to what Mr. Marquez has touched upon. You said that both in relation to SURE and both in relation to the RRF, if I understood correctly, you have been providing technical assistance. In terms of the financial conditions that these debt emission will be developed in the coming months, what role, if any, do you foresee for the ECB? Because I think this is going to be extremely important that the ECB creates the necessary conditions for this debt emission to be successful, which, as everybody knows, is really a challenge. Thank you so much.
Well, thank you very much for your many questions. On your first one, the strategy review that clearly will tackle in particular our monetary policy, but also the communication of our monetary policy, the accountability of the ECB, as I mentioned earlier on. The timetable that we have has been extended a bit because we had to suspend our work during the peak of the crisis, and because simply all staff had to be completely focused on delivering and producing the tools and implementing the purchases programs that we had in place. We will be looking at concluding our strategy review in September 2021. By then, we will have another 9, is it 9 or 11? I'm trying to remember, because we have 10 work streams that are producing a total of 12 different seminars on multiple topics, ranging from the financial instruments, the inflation measurement and trends, to the impact of climate change, to the policy of communication, to price stability, of course, and it is with that sort of timetable of successive seminars that we will wrap up, probably with a midterm review around January, probably, and we'll complete the process in June of 2021. Hopefully, by then we'll be able to have our Sintra usual annual gathering of monetary policy experts, academics, and members of the European Parliament as well. So we cross fingers, and we hope that the resurgence here and there of the pandemic will not stop us in that renewed energy that we are deploying in order to deliver on the strategy review. The second, your second set of questions, which was multiple, brings me to a point that I would like to make, is that symmetry is a matter that had been settled by the European Central Bank, and which was actually, if I recall, approved and reiterated in many introductory statements read by my predecessor, President Draghi. So I know that there is doubt here and there as to whether, given the provisions of our price stability, which is close to but below 2%, whether the symmetry was measured with the same impetus or the same momentum, depending on whether it was below or from above. But my understanding is that at this point in time, even without going into a strategy review, symmetry is actually something that had been already debated and approved. We will be looking at multiple options, let's face it, because I did say that during the strategy review process, we would leave no stone unturned. So if there are alternative ways of measuring, if there are alternative definitions of stability, if there are various ways through which to reach the price stability that we set for ourselves in order to better serve the European economy and our European citizens, then of course we will look at all the options, and we will at the end of the day settle on what will best respond to what has been assigned to us as a mandate under the treaty, which is price stability. The ECB's role, we are prepared to do what we can to help. And I think that we have advanced quite a lot on the SURE program. It's far more preliminary, and I'm not sure that I can say much more than what I have said concerning the recovery and resilience facilities, because, as I said, the periodicity, the volumes, the exact intent are not clear enough for us to be able to actually respond by offering services. If we have the capacity to do so, we will. But I would also like to mention that even if we do not serve as a backbone for technical purposes, given that we are allowed under our various purchase programs to buy some of the bonds issued by regional institutions, as we do with the EIB and, for instance, we will also be able to do that with the issuance by the Commission. So this is another way of helping indirectly, of course, but which is perfectly envisaged and encouraged. Thank you.
Thank you very much. Now I have two requests for Catch the Eye questions. The first one from Fabio Massimo Castaldo, non iscritto.
Grazie.
Thank you, President Lagarde and Chair. A few days ago, the European Banking Authority announced that its guidelines on payment moratorium and reclassification of businesses will be withdrawn at the end of September because the pandemic no longer justifies it. This decision is despite the fact that the second wave of COVID is a reality and it's very unlikely we'll have a vaccine. The requests after the 30th of September will be subject to the normal rules as unlikely to be repaid with the risk of an increase in NPLs. This will mean that banks need to reserve extra funds for their losses, even if they're not meeting requirements. Now, as well as influencing the credit rating, this will make it harder for households and companies to have access to cash, particularly when they need it. Now, the move to automatic rules will remove discretionality. In the light of what I've said, do you agree with these, if these support measures are removed too quickly and that could have a fatal impact and that maybe it needs to be rethought? Thank you.
Well, thank you very much, Mr. Castaldo. It is the case that as a result of the pandemic and as and when moratorium or guarantees fade away or are withdrawn, there will be indeed consequences if the recovery has not picked up massively by that time. So hence my recommendation to the fiscal authorities to be extremely gradual and prudent and cautious in the way in which they remove, they withdraw, they phase out the various support systems that they have put in place. That's point number one. Point number two, although we have not seen a massive increase of non-performing loans so far, it is also a fact that banks throughout Europe and elsewhere for that matter have increased the provisions for non-performing loans going forward. And the NPL management and ultimately reduction is and will continue to be one of the ECB's key priorities. So we will be extremely attentive to that and we will liaise with other authorities in that respect. Thank you.
Thank you very much. And now Hiro Hinauloma from SND.
Thank you, and thank you, Madam Lagarde, for your very thoroughly thought answers and your directness in your answers. I just would like to come back to the money laundering question because that's an important thing and people in Europe and also the voters are more and more asking, are you really doing something to this problem? Obviously we know that this is not an responsibility of the ECB now, but the question is what ought to be in the future. And also the big question is that is ECB as the supervisory of the banks, is it enough hard when it comes to the licenses of the banks and readiness to withdraw the licenses from the banks if they are got in connections with money laundering. And then I'm also interested to hear your viewpoint when we know that quite many member states have said that we ought to have a European level supervisory for looking the problems of money laundering, and perhaps this could also be connected to the ECB. So what's your opinion concerning the need of European level supervisory body?
Thank you so much for coming back with this last question on anti-money launderings and the financing of terrorism. These two often go together, and I think that we all need to be particularly cautious as there will be assets for purchases. There will be non-performing loans being bought here and there, and that's an ideal time and vehicle for some of this money laundering to actually take place below the radar screen. So I think that authorities in the various member states hopefully are very aware and attentive to that. But weaknesses in the European framework on anti-money laundering and countering the financing of terrorism, or in its implementation, in our view, is a risk to the integrity and resilience of the European banking sector. The ECB's supervisory tasks explicitly exclude, as I said earlier on, AML-CFT supervision of banks, and under the treaty, the ECB also cannot exercise such a task. So countering money laundering and combating the financing of terrorism remain a national competency. But we have seen that because of fragmentation, because of differences in the scrutiny of supervision and the supervision practices in that field of AML-CFT, can actually undermine the integrity and the stability of EU banks. So we really welcome the ongoing discussion on improvements to the AML-CFT framework, including the establishment of an authority which at the European level would actually be the supervising authority in that respect. It's always difficult to establish that level of supervision because the national levels are going to resist, are going to resent. But frankly, in a matter as critical, as sensitive as AML-CFT, I hope that these particular sensitivities can be overridden. Thank you very much.
Thank you very much, President Lagarde. I owe an apology to Pedro Marquez because he had a follow-up question and he still had 1 minute, but I didn't see his request because from the platform I couldn't see. So I will give him the floor for 1 minute for his follow-up question. Thank you.
Thank you so much, Madam Chair. Madame Lagarde, quick question. Going back to one of my points, the fact is that we didn't achieve the inflation target, and now we are even further away from the target because now we are in deflation. At least the numbers from August are of deflation. So my point is clearly, what additional monetary policies can we perform, instruments can we deliver on to get us close to the objective and to get us further away from long-term unemployment in Europe? That's the risk we are facing. Fiscal policy is doing a lot, but more has to be done from the side of monetary policy for us to even be close to 2% target. Thank you.
Well, thank you very much. I think I did answer your question. I just want to remind you what our projections are when it comes to inflation, and that will not surprise you, but it's gradually increasing to 1.3% at the horizon of our provision, which is not satisfactory. It's not the close to the aim that we are pursuing, and that has been defined for price stability purposes under the mandate. And as I said earlier on, if and when we get the right level of information, the appropriate and reliable data and the empirical evidence, we will look at what needs to be done, what tools should be used, and whether we need or not to recalibrate, and what kind of flexibility we need to use. Second, I would also remind you what I said earlier on, which is that as part of the strategy review, we are going to look at combination of the inflation measurements, the inflation trends, the price stability objective that is assigned to us under the mandate, and we will come up with a holistic proposal in relation to our strategy for monetary policy purposes. Thank you.